You're tuned back into Agriculture Today, and we continue our grain market conversation with K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. As we do continue talking, we covered wheat and transportation in our last segment. So leading us on into feed grains, Daniel, what are we seeing?
The story coming out of that WASDE and the accompanying crop production report had to do largely, I think, with the U.S. yield. There were pre-report trade expectations of like 183 and a half bushels per acre, or 184, depending on who you talk to. This number came in at 186 even, I believe. It's the number for corn. Right, 186 even, down 7/10 of a bushel. Still, I guess that we've come now from the September report, skipped the October, went to the November report for corn, and the market was bearish. I guess more pessimistic on yields than the USDA came out with. So I guess, Guy, this is an issue of kicking the can down the road again. That still, so if we, and the survey that we did on October, pardon me, for on November 1, was happening during the shutdown, or just and what a challenging situation. So still, I think you can bang the drum too much on uncertainty. I think what we have right now is what the markets could trade on. I don't think people are waiting with bated breath for the final January numbers to come. However, I guess I would say there's still just because of the way the information out of the USDA has played out this year, when it's been available and when not, still some uncertainty that and surprises that could come into the market in the January annual crop production summary and the accompanying reports. Other than that, but by the time we got we had taken that information in, we'd seen on actual U.S. yields, we had seen the projected crop still at 16.75 billion bushels, was 16.8 something in the September report. Yes, 16.814. So basically down about 62 million bushels. The USDA did. Probably a bigger issue than the production figure was that they had raised the ending stocks from last year on that represented where we stood on August 31st by over 200 million bushels. So since the ending stocks from last year higher, the beginning stocks higher by the same amount, and you've got two factors, both record large crop and increasing stocks, both coming in and just plowing a bunch of corn going forward into this marketing year. Haven't seen a lot of changes. Really, the only changes that we've seen on the usage side were that feed residual usage was raised 144 million. Excuse me, that was supply. Total supply is 18.3 million. Feed residual unchanged, pardon me. But then the export figure raised 100 million bushels. And Guy, that ties in with the comment you'd had in the last section that we've got this strong pace of exports going forward, and really, even though the USDA is catching up, you see for the data we have heading off into October, during that break, we continued to see purchases going forward. The USDA did raise the price for U.S. Average season average price from $3.90 to $4 by a dime. So a small amount, but it says something about underlying usage and demand. Probably a fair amount of that export strength. Stocks used from 13.1 to 13.3%. And really on grain sorghum, no change. What's waited for on the grain sorghum is whether and to what degree China is such a predominant buyer in that market, whether they'll come back in and start to move sorghum. Hasn't happened yet, although the last set of numbers I'd seen for this information in early October was showing some activity coming in, a little bit more than we had been seeing. That I would not be surprised. I guess I'll just be really curious, Guy, to see where during that break, if there were buyers that were quietly coming in and buying grain sorghums because it was so cheap during that time frame.
Yeah.
Guy, I guess I'll throw it over to you on the international side for anything you see on the feed grains.
Yeah, look, the numbers for both corn and sorghum were pretty much unchanged domestically, which surprised me a bit. They did raise the exports 100 million bushels, which is a bit optimistic. Uh, Look, we're on pace for a record export program this year of I'll put this in read my computer here. 78.1 million metric tons, which look, that's a real strong number that they have in there. So as long as we keep up the pace, that'll be good. And as that continues, that should lend some support to prices. On the sorghum situation, there has been reported some smaller sales to Mexico. Really haven't seen China in there at all. We really need them to come in, but I think that those Mexico purchases, they have the same economics we do here in the U.S. Sorghum is pricing itself both into the feed rations and the feedlots and poultry as well as into the ethanol grind. Looking at the global situation for coarse grain, ending stocks pretty much unchanged from September, but down 10 million metric tons from last year. International or non-US stocks are expected to drop by 26 million metric tons. 18 of that is in a drop in China. China's production, I think, is a bit better this year than what we've anticipated. Argentina's old crop or ending stocks are down. They also expected non-US wheat feeding to increase by 3.3 million metric tons. I think that's reflective of the cheap value of wheat and that it's being fed in a lot of countries there as well. Particularly, that'll start with the lower quality stuff on that. So look, the good thing is we're seeing a strong export market and that lends itself to, I think, the strong demand from the feed sector, particularly. And people continue to eat beef, pork, your animal proteins, and I continue to be pleasant surprised to see that strong feed demand and livestock demand across the board.
And moving on to our last commodity to talk about today, soybeans. Domestically, Daniel, what are we seeing?
Well, domestically, we're seeing a tremendous run up in prices. Anymore when we see something positive in the markets, given the kind of the harvest time frame that we're in, we react to it with surprise. Have seen prices in the last several days jump up to about 1170 or so, and that follows from the USDA in their balance sheet projections on the 14th, November 14th. They'd raised the price projection by 50 cents from $10 to $10.50 for this marketing year. So, most of the time they're just shaving around the edges. I will give you 5-10 cents here and there. They're raising 50 cents. So there's something happening. I just would say on the domestic balance sheet for soybeans, it's really kind of quietly been one piece of pretty positive news that's happened in coming out of that report. It hasn't been talked about a lot, but the USDA did lower the U.S. average, the projection of yield by half a bushel from 53.5 down to 53, still record high. But that led to a decline of about just under 50 million bushels. You bring that through the balance sheet. Crush was unchanged. By the way, crush still remains tremendous relative to the last 3 years, 2.555 billion bushels. We were at 2.4 and a half last year, 2.3 the year before. And so that's a positive quiet mode. But crush sure outpacing the export figures. The USDA did drop the projection of exports down to by about the same amount as they dropped the crop, down by 50 million bushels, 1.635 billion. By the time they worked all the way through, ended up and dropped ending stocks by 10 million, 290 million, basically back where we were about in August. And then again, and the stocks use actually against a quiet deal guy, but 2 years ago, 23-24 market year, we were at 8.3% stocks to use, 7.1 last year, now down to 6.7. So it's certainly not a barn fire tremendous market, but it's something worth looking at. And guys, as you go off into on the international side, just wanted to make a statement that it's interesting to look at world less China ending stocks. That So 2 years ago, 23-24 marketing year, 27.4% stocks to use. Again, 24 point, again, about the same last year. Then and this year had seen it's at about 26 thereabouts. So whereas tightening up a little bit on the domestic side, on the international side, we're still holding in there decently, but yet prices are going higher. Guy, any thoughts on that?
Yeah, not a lot to add on the soybeans. Just a few comments in there. Talking about China, USDA has a near record import for them this year at 112 million metric tons. That may be a bit optimistic. It's good to see that trend in China continues to move upward. My initial thought a year or two ago, with the population starting to level out and drop, that the soybean demand would do the same, but it continues to move upward on that. Talk a bit about our competitors down in Brazil. When I looked at the supply demand balance sheet for Brazil about August, I figured they had about enough carryover soybeans to run out about Thanksgiving or Christmas. We've seen the Chinese start to come in and buy some soybeans. If my balance sheet numbers are correct, they're going to have to fulfill that demand, I'd say, if not by the end of the year, by January there, at least to meet that initial purchase commitment that they made. The interesting thing on the pricing, 4 months ago, China was buying soybeans pretty much exclusively from Brazil, and they were paying $1.50 a bushel premium to the U.S. soybeans, CNF China. Today, the situation's kind of reversed. They're actually paying $1 a bushel for U.S. soybeans above Brazilian soybeans today. If the Brazilians were running out, you would have thought they would have done that by pricing their beans higher. So I scratch my head a bit, as the Chinese just don't seem to be acting in an economically rational business fashion on that. So I think politics is driving that market more so than an economically rational grain trader on that.
Daniel, Guy, I appreciate you both taking the time to join us today.
Shelby, thank you very much. Take care.
That was K-State grain economist Daniel O'Brien and the senior economist at the IGP Institute at K-State, Guy Allen. We're cutting to a short break now, but we'll be right back.